right, welcome back. You're watching The Money Show, and it's time to get our portfolio queries checked by our expert. Shweta Jain from Investography is the one who will be doing your live financial planning today. Good evening, Shweta. Welcome to the show. And for all the viewers who've just tuned in, you can also send across your questions on our WhatsApp number and our email ID. WhatsApp number is 865-797-4571. Email ID is themoneyshow@etnow.tv. Shweta, let's begin with Jishnu's question, and he needs your guidance on his profile. And he started with 50,000 lump sum, and he also wants to do an SIP of 10K each for next 15 years. He will step it up 5 to 10% each year, and he says that he already has debt investment in money market and RDs, and that's around 20K for him monthly. Total is 70K is what he's investing right now. The funds that he has in his portfolio: ICICI World Discovery, HDFC FlexiCap, SBI FlexiCap, Nippon India Growth, Kotak Small Cap, and based on these funds, he wants you to give him a plan, or maybe just cross-check his fund mix first.
Thanks for having me, Kavita. He has a good mix of large, mid, and small cap. There is flexi cap in between as well, which can change its allocation. So that's something that we don't have control over. So I would just recommend one change in his portfolio, that if he doesn't add too much to SBI flexi cap, I think that's something that he can avoid. He can stay invested. He doesn't need to exit the scheme. But that's just something that I think will make a good addition to his portfolio. UTI Nifty 50, low cost. I know it's people find passive funds boring, but I think it's a good way to build core portfolio. He does have a Nippon India Growth Fund and ICICI Value Discovery, which has large cap stocks as well. And FlexiCap also will have large cap, but a part of it you can't control. So I think a passive fund as an addition would be great.
All right, let's move to our next caller, who is Ignatius, and he's live on the call with us, connected from Kolkata. Hi, good evening.
Good evening. Good evening.
Thank you so much for sending us your questions, sir. So, you already have a portfolio, I believe?
Right.
Okay. Nippon India Large Cap, Nippon Small Cap, PPFS Flexi Cap, HDFC Flexi Cap, PGI Mid Cap, Quant Mid Cap, Quant Small Cap. And you have 2 lakhs in Axis short term, 1 lakh in HDFC
right.
short term, 3 lakhs in Mirasset Aggressive Hybrid Fund, and you want to invest for more 5 years. And you're doing an SIP of almost more than a lakh, more than a lakh, and you will step it up by 10% every year. Corpus is 3 CR. Is that right, sir? Can you...
Right.
So you can tell me, since how long are you investing?
I've invested for a couple of years. I've lost count.
Okay.
But I started small and then I built up.
Okay.
So it was, right now I'm doing 1 lakh 10, but I kept on increasing my allocation.
Lovely. So the current market fall is not troubling you? Can we say that?
Slightly, a bit, yeah. In some of my large cap funds have come down a bit, and the mid cap funds have come down a bit.
Yeah,
but the
totally.
flexi caps are okay. I'm still in profit with the
Okay.
flexi cap funds, yeah.
What's your current portfolio value? 1.37.
About 1.37 R, 1.37
Sure.
CR. It keeps fluctuating here and there. Yeah,
Sure. All right. So let's speak to Shweta about this. Now, Shweta, he can invest for more 5 years. Now, this is a very tricky time frame, because first you need to tell us, is the fund mix right? Second, how much more he should invest? And third, can he take an aggressive approach now, considering it's only 5 years? In next 2 years, he will have to start withdrawing or maybe parking his a certain amount of corpus to debt funds or to, safer investment instruments now. How would you like to strategize this for him?
So Kavita, the portfolio mix looks good actually. It's fine. I don't think there should be too many changes that he should be doing. The only thing that he should keep in mind is there are some schemes where he's doing 25,000 per month and some 10,000 per month. So the mix can get very lopsided. So it could be too much exposure to some schemes. So annual review is something that I would recommend. Because otherwise, irrespective of how well a scheme does, if you're not having adequate allocation, it won't make an impact in your portfolio. with his investment of 1.1 lakhs per month, he will be able to get to his goal. The tricky question here, though, is if after 5 years, does he need to start withdrawing immediately? If the answer is yes, then for the next 2-3 years, he can still invest in equity because he does have older funds. But he would start to take a little more balanced approach. He may start to move to debt funds as well if he wants cash flow from that immediately. However, sometimes we do forget that, after retirement, money still needs to grow. So if this is the part of the portfolio, this entire thing is where it can grow only, and he has another place where cash flow is coming, whether it's pension or whatever else it is happening, then this is fine. Then he can go equity here full hog, but otherwise not really. He will need a complete review of this portfolio in another year.
All right. Anything else you want to ask Shweta, sir?
No, I'm fine with it. Actually, I've got debt funds also. I've got an invested in savings,
Yes.
and I got all the other funds also there. So I've got my debt fund also allocated.
Okay.
I've only given my equity, right? So I've got that also.
All right.
That's it.
Okay.
Thank you.
Thank you so much. All the best. Let's move on, and I have Mr. Murugan with me on the phone line. Hi, good evening.
Yes, sir. Yeah, ma'am. Good evening.
How are you doing today?
Yeah, very good, sir.
Okay, sir. So, you plan to invest 50,000 by SIP?
Yeah, yes, ma'am.
Okay. What's the corpus that you're looking at, sir?
For a retirement plan.
Retirement? 10 to 15 years?
Yeah.
Okay. So, but then what will be the amount that you will need every month after 10 to 15 years? If you could just tell us that.
Around, I need today my family expenses for 25,000. I need after 10 years inflation beat that amount I need.
35. How much did you say? Sorry, I did not hear that.
Ma'am, today, this month, I need my family expenses 25,000.
Huh.
After 15 years, inflation beat. Each amount need that amount I need.
Yeah. Okay. Inflation beating. Okay. Currently it's 25,000. So, okay. Got it. So far you don't have any exposure in the equity market, not even direct stocks, nothing you have.
No, ma'am.
So this is your first investment in the share markets by mutual funds. Can we say that?
Yeah, mutual fund, ma'am.
Okay. Perfect. Shweta, interesting. So, Shweta, if you could just tell us first, how much is the corpus that we needed?
His age, I would need to calculate. So I'm not sure what his age is right now. If you can share that as well.
Please share your age.
43.
43. Okay.
Okay. So he would need close to 5 plus crores based on inflation and, continuing inflation post his retirement as well. With his current 50,000 SIP that we're seeing, he will get to close to 3 crores after 15 years. So that is something that he will need to work on, I think. He can do UTI Nifty 50, a bit of mid cap if he's okay. Then he can do Kotak Emerging Equity and Motilal Oswal mid cap. But 25,000, I would say UTI Nifty 50 and 25,000 between Kotak Emerging and Motilal mid cap with a higher amount to Kotak Emerging. So this way he will have a slightly conservative, I want to say, equity portfolio. Since I believe he doesn't have any equity exposure, I think this is a good way to start off. He can then add maybe a Bandhan small cap a few months later if he's comfortable, and as he's increasing his SIP amount.
All right. So you have the fund's name, Mr. Murugan. Bandhan small cap, Kotak emerging equity, UTI Nifty 50 index, Motilal Oswal mid cap. Anything else you want to ask, Shweta?
No, ma'am, no.
All right, sir. All the best with the investments ahead. And thank you so much, Shweta, for being on the show. It's time up. And thank you once again for taking time out for our viewer queries section. And for all the viewers, I'm going to leave you with our WhatsApp number and email ID. Do send across your questions and we will help you with your financial planning live on the show.